All right, we are going to get today's program underway, 12 o'clock on the dot. Thank you all for being here today for the webinar that has been coordinated by Roy Wagner and his team at Michael Best and Friedrich, a creative approach to construction and real estate conflicts, benefits of a multi-practice approach. We certainly appreciate all of the efforts of our members and our sponsors to bring this invaluable type of content to all of you, the members. With that, I'm going to turn it over to the team.
Thanks, Tracy. Obviously, this is Roy Wagner, and we're glad to partner with CARW to have a conversation today about some of the issues and concerns that I think the real estate and construction industry has about the next year and how it's going to look. I'm going to act as a moderator today, try to facilitate some conversation between those who are joining me. At Michael Best, I chair our construction law section, and joining me today is we're really glad to have Ian Martin, the recently coronated president of the Mandel Group. So thank you, Ian, for joining us. Ian will assist us, obviously, with his years of experience and firsthand perspective in working on behalf of the owner-developer role. My colleagues include Michelle Eben, who Michelle chairs our real estate practice group. Vince Maroney, he's a member of our business and transactional group. Chris Schreiber is part of our creditors' rights, which deals with insolvencies, debtor-creditor rights, and my partner Lauren Triebenbach, who practices with our construction law group. So today we'd like to introduce what we think is a creative solution for those in the real estate construction field who, as they look down the calendar and think about what's coming up, how to deal with uncertain times and perhaps what we might see in the third, fourth, and first and second quarters of next year. I just picked up a couple of articles that has been in the local press that have highlighted, I think, what many in the real estate and construction industry are concerned about. The Daily Reporter at the end of June talked about virus pummels commercial real estate could end long boom. And there the quotes are, hotel, restaurants, and stores that are closed in March have only seen a partial return. Two trends are compounding the difficulties for office tenants are considering renting less space as more employees work from home. And obviously we know that the swift emptying of commercial space marks a sharp departure from real estate markets that have boomed in large urban areas like New York, Chicago, and other cities, encourage businesses to move to the suburbs. And then I saw an article in the Daily Reporter from July 30th, just last week, titled "Construction Spending Plummets and Worst Downturn on Record." A couple of quotes from that article. The U.S. economy contracted 32.9% in the second quarter. Economic figures show the construction industry had a chaotic second quarter, and there's a pandemic is far from over. The industry is likely to wrestle with even more economic fallout in the coming months. And when I opened the Daily Reporter this morning, it was a survey that said contractors report July income gain after months of loss, which appeared to be encouraging. And it was a survey from 24 Wisconsin contractors that they had seen an increase. But the concern was at the end of the article that a third of the firms that they surveyed said they'd remain viable for at least 6 months or less under current conditions. Which of course doesn't bode well if you happen to unfortunately have a project that one of those contractors is working on. So what I'd like to do is suggest that we're going to put forward, sort of a template fact situation under which we can work from and talk about the types of tensions that owners, developers, and construction professionals may be facing in the next 6 to 12 months. Our experience has told us that when owners, developers, contractors, and professionals are faced with these problems, the focus tends to be on the limited surface issues. And we'd like to dive in a little bit of that and perhaps talk about some creative options by using a multi-practice approach where you're going to get advice from lawyers and your other advisors across a broad band of real estate, construction, business, creditors' rights, insurance, public relation firms. At our firm, we encourage this sort of multi-practice approach, and we've established what we call the Real Estate and Construction Conflict Team. So let's focus on this creative advice to owners. And we know that perhaps we have construction professionals in the audience, and for those of you who are that liking, you'll perhaps have to do a little reverse engineering with our advice, because we're going to try to give advice to owners about what they should do in this situation. So let's kick it off with a template fact situation. This hypothetical will say we've got an owner-developer who purchases a building and a parking lot in the 3rd Ward. The owner-developer intends to renovate the existing building to use for commercial tenants on the 1st floor and multifamily on the 2nd. And so let's assume there's going to be construction. So that's our template fact. But I think it might be helpful if we sort of went around the horn in our table here, and perhaps each of us give a key piece of advice that you would have an owner think about as they start their project, especially given what we think and our concerns are in the next 12 months. So let's start it off with Ian. In light of today's market uncertainty, what would you tell real estate professionals to perhaps reduce the risk of some of these calamities happening?
Yeah, thank you, Roy. So I think the issue I've been spending most of my time thinking about lately on this is what impact will COVID have on demand for multifamily? Thus far, it's been relatively stable, I would say. Delinquencies have not increased amongst most portfolios that I'm aware of. So far, so good. But I think as it drags on, we have to be prepared that folks will be moving less than they might otherwise be inclined to. So I won't dwell on how you pick contractors and all that for now, but the way I think of it is you really have to be careful about stress testing your absorption rate in a multifamily setting. So if you used to lease 15 units a month, you really need to think about what it's going to look like when you're only leasing 7 to 8 units a month. What does that mean for your capitalized operating reserve, your capitalized construction interest reserve? That's one good way to insulate yourself from potential problems down the road.
All right, I want to switch over to Vince. Obviously, in the corporate world and business world, as you're advising owners, what type of problems do you want to avoid, and how do you do that?
Yeah, one that comes to mind, comes up a lot, is just having a lack of flexibility or lack of clarity in your organizational documents, whether that's an operating agreement, partnership agreement, whatever it may be. You want to be as clear as possible so that parties and managers know what their rights are, what they're able to do, and what options there are in different scenarios, whether it be transfer restrictions, management decisions, that scenario. But also you want to remain flexible and general enough to provide enough flexibility to pivot, especially in these unpredictable times if something were to come up. Now, there's obviously certain fundamental decisions where you're just going to need more input or a higher level of decision making, but there needs to be enough flexibility to pivot quickly without having to bog it down as well. So just striking that balance between being clear but also remaining flexible.
All right, thanks, Vince. Lauren, you're talking to a lot of contractors, but in this case, what are you going to tell an owner when he's hiring a contractor in today's market and architects?
Well, I think the first point is that consultant selection is very important. In a situation like our template fact situation, where an existing building is going to be reused, you want to select an architect and a contractor that are experienced in reusing those existing buildings rather than having a focus on new construction, ground up construction. Owners also should look at the cost of obtaining a payment and performance bond for the project. Typically, the contractor obtains these products for the benefit of the owner, and usually the owner bears the cost of that Requiring a bond is also a good check on the financial stability of a contractor, since not all contractors will be bondable and able to obtain that bond. And then finally, owners should make sure to have significant and appropriate insurance from their architects, contractors, and subcontractors. And there's a newer product out there called subcontractor default insurance, which is providing protection if a subcontractor is unable to complete a project. And that's a good risk protection factor to have on your project.
Michelle, you work with a lot of developers. What do you advise from a real estate development standpoint, given the uncertainties in the market?
Sure, Roy. Now more than ever, it's critically important that owners don't negotiate their deal documents in a vacuum and ensure that all of their deal documents on any project are tying seamlessly together. This is your loan documents, your construction and design professional agreements, the lease terms for both the commercial and your residential tenants, as well as if there is a license agreement for that parking lot in our fact scenario. This is not just the typical obvious deadlines and delivery dates, but also the less obvious, such as key provisions to ensure that all decision makers are able to get into a room and force them to get in a room to come up with creative ways to resolve disputes quickly. Having a seamless dispute resolution provision through every single one of your deal documents can really get ahead of disputes before they blow up.
Chris, what do you suggest to owners from a debtor-creditor standpoint to reduce their risk of later financial issues that come back to haunt them?
Well, what we've seen in the past few months, Roy, is that unpredictability is king, and financial issues that could negatively impact this particular project could take many forms. I think that sloppiness will be the death knell for developers in this situation. Underwriting and examining the best possible products for the particular market are critical. So that includes choosing the correct owner's rep or construction manager to really keep an eye on the costs, scheduling regular all-hands calls, which I've found to be a great way to keep all the parties on the same page and limit surprises, and also speaking to the first floor retail tenant, really being extra vigilant in the selection of who that should be. As we've seen, many businesses turned out to not be very resilient to the pandemic, and those types of considerations should be forefront in deciding who's going to maintain that space.
Yeah, one piece of advice I give a lot of owners is make sure you upgrade your team, and that may include both your employees who have project management, but a risk management tool is to hire a separate owner's rep who has his own eyes and ears as well as insurance, and or upgrade the role in construction administration of the architect. More inspections, more pay approvals, with the idea that lend their eye to make sure everything's getting done. And secondly, they can be early messengers of problems that they might see on the project that your own employee project managers may not. And secondly, provide an extra layer of insurance if somebody misses something. It's all about getting the project done right and on time, and these people can help that and provide that risk management technique. All right, let's confront our first real live problem for our hypothetical project. In the middle of the project, a key subcontractor, let's say the electrician, goes belly up in some fashion or the other. And suddenly we've got a key trade contractor not performing. Chris, how much does an owner have to worry about when a sub defaults or the receiverships or bankruptcy actions? And what practically can they do?
Well, in the context of a subcontractor's bankruptcy, most of the burden of dealing with that will be borne by the general contractor, but that's not to say that the owner should not take a very active role in monitoring the subcontractor's bankruptcy case. And of course, the type of bankruptcy will depend on the short-term future of the project. Generally speaking, if that sub goes into a Chapter 7, that's going to call for a fairly quick and urgent triage and replacement of that contractor, because businesses who file Chapter 7 are not attempting to reorganize. Conversely, if that contractor files a Chapter 11, it may still be operating and may still be relying on the revenue from this particular project to reorganize, in which case then you may have the ability to continue to work with that subcontractor. So it's important to understand the type of filing and the short-term impact that the bankruptcy filing would have.
Lauren, if you represent that owner, what do you do to prevent delays in lien filings if you want to give them advice?
Well, the owner's first going to want to find out from the general contractor if the defaulting subcontractor had any downstream subcontractors or suppliers. If they did, they should ask the general contractor for an accounting of what has been paid to those downstream subs and suppliers, so we can help them determine if anyone is looking for money. This will give the owner a good idea up front of who might be filing liens because they've not been paid. If the general contractor has purchased subcontractor default insurance, then the owner should also ask the contractor to make a claim. This is especially true if the subcontractor who went under it still has a lot of work remaining and and has been paid for work that's not yet been performed, because then the contractor and the owner are going to be faced with the question of having to expend money they've already paid out. Ultimately, if the subcontractor goes under, as Chris said, this is the responsibility of the GC to make it right. So I really want to make sure that my owner puts the GC on notice of a possible claim promptly and in accordance with the contract. It's the GC's job to make sure there aren't delays as a result of the subcontractor going under, but I substantially and my client substantially increases their position by making sure they follow those claim procedures in their contract.
All right, Ian, that's not a good call when the owner hears that one of the trade contractors is not performing anymore. You know, what tools are in your toolbox, and what levers are you going to pull and push?
It's right. It's not a good call, but it's a call that happens not uncommonly, I would say. And whatever the contractor or GC says, the reality is it is your problem as an owner, so you may as well be prepared to deal with it. I think if you do the upfront blocking and tackling appropriately on contracting your job, you know going into it who the weaker subcontractors are. So if you did an open bid review, you know those subtrades where you might have a material gap between the low subcontractor and the next low subcontractor, even once you've qualified them. So in that case, you might elect to go with the low subcontractor, even if they have slightly less work experience or are slightly less capitalized. In those situations, especially for key trades, you might think about some sort of risk-sharing arrangement with your general or your CM. So you might say, for example, I will selectively bond that trade as opposed to bonding the whole job. You might look at that situation and say to your general contractor, okay, we're going to save $100,000 if we go with the low guy, but the next guy's $100,000 higher. We'll split that risk. I'll take 50 of the risk. Generally, you take 50 of the risk. And so having that open conversation, the other thing it allows you to do is when that problem happens, you also know who your backup is in pretty short order.
Is SubGuard insurance a discussion point?
Not on most deals these days, I would say. It always comes down to what's the cost of the insurance, of course, and similar to a bond, who's going to pay for it. So I would say it's a topic, but it's not one that I'm seeing executed frequently.
All right, let's tweak our fact situation. The general contractor or CM now defaults. We moved up the ladder. You know, obviously we know a lot of general contractors have 2 to 15 projects going at any one given time. Here may be going along swimmingly, but one around the corner or down the street may have big problems, and that could create a ripple effect and domino a problem with yours project. Lauren, the general contractor is financially failing. Trade contractors are not getting paid. What are you going to tell that owner? Will the contractors continue to perform the owner's project?
Well, the first thing that the owner needs to do is immediately review its contract with the general contractor to determine its what we call step-in rights, which is the right to step in, assume the subcontracts, and finish the project. An owner should give very careful consideration to which subcontracts it wants to assume. An owner should assume only those subcontracts subcontracts that need to be in place for completion of the project. So an owner probably doesn't need to assume the contract with the excavator for the project if they're at the fixtures and finishing stage. If the owner is going to assume subcontracts, it should strongly consider engaging a construction manager to supervise and direct those subcontractors so they don't find themselves having to serve that role in addition to being the owner on the project and keeping track of finances. And lastly, the owner should demand an accounting from the general contractor so it can determine which subcontractors and suppliers haven't been paid so it can anticipate and timely respond to payment demands and any lien filing.
Chris, a term that's bantered around when somebody goes bankrupt in the construction is the phrase executory contracts. Maybe you could explain that concept in civilian terms and how it impacts this and how it flows with the whole bankruptcy landscape.
Well, the reality is that we could spend a whole separate session over lunch and then some describing and explaining executory contracts. An obvious example that many of the folks on the phone would be familiar with would be the Pier 1 bankruptcy. All of the leases around the country for the Pier 1 stores that ultimately were rejected when Pier 1 decided to shutter, those are all executory contracts. Or speaking to our fact scenario, again, getting a little bit outside the contractor default problem, but that first floor tenant in this rehabilitated building or the tenants upstairs in the multifamily part, their leases with the owner are all considered executory contracts. So what does that mean? Well, it means that here, if the general contractor, if the project is ongoing and the contractor defaults and goes into bankruptcy, his construction contract is an executory contract. And bankruptcy, a core tenet of bankruptcy law is that the debtor has the ability to assume or reject executory contracts. And picking up on a theme earlier, if the general contractor is going to continue to operate and needs this contract to do so, it's going to take efforts to assume it. So we always advise retaining counsel to help navigate these complexities.
Michelle, what about a project being stigmatized by the GC going under? Suggestions here?
Yeah, Roy. If it's a high-profile project or if there's a concern that the general contractor is going to flood the market with a negative tone about the project, you may want to consider getting a PR professional, such as one of our colleagues or coworkers at MB Strategies, to help set the narrative for the public. And that could be press releases, that could be meetings with key professionals on the job, it could be meeting with local leaders to make sure that those who are invested in the project hear stories that you want them to hear.
All right, great. Ian, you've been a developer side for decades. What are you telling your business partners, your investors when there's contractor problems?
In most of the deals that we do, we accept construction risk for our investors. So in the event you have a general contractor, a construction manager go out, bad news travels fast. So step one is to let them know. I think step two, like everybody said, is to get your arms around the magnitude of the problem. The reality is, I think if you do things properly up front, your exposure is at least limited. So, for example, if you handle all your construction dispersing through a title company, which is kind of development 101, you should never be more than one draw behind on that. So I think there's a lot of mechanisms that are in place on the front end of the deal to limit the damage. But in terms of what you tell your partners, whether it's debt or equity or otherwise, I think you have to tell them.
Vince and Chris, I want to sort of switch over to a problem with owner financial problems. This is a case where the project's underway, and for whatever reasons, whether it's over budget, financing or lending package falls short, or the like, what type of concerns does an owner have if the developer is financially failing?
So, I mean, there's obviously concerns as to performance and those types of concerns, Roy, but the potential solutions there, I mean, as far as developer taking some type of ownership interest in the project itself, you know, working more collaboratively together to try to come to some type of solution there. There's going to be a lot of factors you need to consider in that situation, obviously, how that's going to affect existing investors and owners, and what the issue would be there. But, you know, that's obviously one possibility.
All right, I want to circle back to Ian. Let's talk about a situation. What are the types of problems that can create owner financial tension?
Yeah, I think in the hypothetical you proposed, Roy, I would say the number one problem is it doesn't sound like the developer had their capital stack complete at the front end of the deal. I think that's maybe not an uncommon mistake, but it is a fatal mistake. I would encourage every developer, lawyers counsel your clients accordingly, finish your capital stack before you start in on a project. In terms of what are the events that can cause an owner to have financial problems on a project, it could be any number of things. Cost increases. Those cost increases, in my experience, are usually derivative a weak set of plans, construction documents on the front end, so gaps in details, not enough spot elevations on your civil engineering, you name it. Those are the sort of things that necessitate change orders. For owners, the schedule is another part of it. If a schedule drags on too long, you're not delivering income when you thought, you may exhaust any capitalized reserves you had on the front end of the deal. So I would say those are sort of the common sources of cost overruns.
Lauren, the general contractor calls you, and what's on your list of questions and concern about the failing financial owner?
I first ask my client, the general contractor, for a copy of his contract. I want to review the claims procedures first in particular. Many contracts have very short deadlines for submitting claims to an owner. And if you miss those deadlines, it can be fatal to the contractor's claim. So it's really important to have a grasp as to those deadlines so you don't run afoul of them. I'd also ask the general contractor for an accounting so I can identify how much has been paid to date by the owner and what the balance that remains is. Lastly, I would help my client decide whether it would work best to stop work or terminate the contract. And that's really going to depend on a number of factors, including the general contractor's relationship with the owner, how close to completion the project is, and whether or not the owner has the ability to make other arrangements for payment. A decision to stop a project or to terminate a contract is not a decision to be made lightly. It really is where you want to consult with competent counsel that you trust.
Chris, anything a general contractor or a subcontractor can do to improve his outlook on getting paid by an owner? What are their options?
Well, leverage in these situations can sometimes be limited and fleeting. The hypothetical under which we're working kind of presupposes that there is some construction lending source, which then would mean that there is a title company involved and that there is some control over the construction draw process. And from that is a little bit of protection as far as invoices going unpaid for too long. But even in that scenario, there is no inherent protection for the unpaid contractor other than diligent enforcement of lien rights. And certainly this gains in importance when you do not have a monitor or a title company in place on projects where maybe the owner is self-financed. So it always shocks me when sophisticated contractors call me and have totally lost their lien rights because they've not been diligent with tracking their AR aging. So I can't stress enough that timely enforcing lien rights, which is sometimes a challenge under Wisconsin's very strict laws, is really important.
All right, well, let's assume that the owner here is not really a bad actor. He's just the project's over budget. The project probably has legs if it gets done, but there's a high probability of success if it does get completed. Chris and Vince, let's talk about the less adversarial techniques for a general contractor and pull in Vince and his corporate ideas to create some sort of win-win for this.
Sure, as we alluded to earlier, that the option is there to take an ownership interest in the project. There'll be a lot of factors to consider there with the existing investors, potential dilution issues. You'll need certain approvals to bring them on. What's the developer gonna buy in at? Purchase price wise, are they gonna have specific rights, preferred returns, any preferential rights, anything like that? How's that going to sit with the existing investors who already have their skin in the game? Have you tried with additional capital contributions and things like that? If not, and they're coming in, will the developer want to do that or be on board with that, or just want to make a one-time investment to keep the thing going? There's all those different factors to kind of weigh and consider when, deciding whether or not, but it could be a win-win if the project just needs a little bit of help to continue on.
And Roy, picking up on this concept of trying to work together with the owner and also on the lien conversation from a moment ago, I mean, we all know that liens are a huge problem for owners, and once a lien is filed or even threatened, it can create a cascade of problems. So that, in real time, is the contractor's leverage to negotiate with the owner. And Vince was talking about project-specific negotiations, maybe taking a stake, but maybe there's an opportunity to work with the owner after this project is complete, and getting some type of leverage or ability to take a first or last bid opportunity on a future project in exchange for maybe a termed out payment of the unpaid amounts on this project, of course, if possible, supported by some collateral or a guarantee, so that the lien leverage is reduced, but the contractor has leveraged that into some other future opportunity.
Ian, will an owner welcome a contractor participation in the type of nuances that we just discussed? Are there challenges to that discussion?
Yeah, I think most of the time the owners would prefer not to have their contractors as partners, especially in the context of an inability to pay. If the owner's not paying, there's a problem with the project. Maybe the long-term prospects are good, but the reality is the project's not worth what it was originally thought it'd be worth. The equity is probably worth less than it was projected. So issuing more equity, whether that's membership units or whatnot, is dilutive to your other capital partners. So I think that's a problem. I think there's been times where you can consider a subordinate debt or unsecured debt with a particular GC or subcontractor where outside the project you issue a payment obligation. I say outside the project because virtually if there's any sort of debt financing on it, it's likely to preclude subordinate debt. So your borrower can't be the person writing the note or the entity writing the note. I think the result that happens 9 times out of 10 is what Chris talked about, which is the sort of, hey, if you help me here, I'll catch you up on the next one approach. Some of the older guys in the industry call them markers. You put out a marker with somebody. I think if I was counseling a contractor, I would say you're really just underwriting the word of your development partner at that point and what their business prospects are. So none of them are great solutions, but the marker, so to speak, is probably the most likely one to happen.
And maybe better than a project failure.
Correct.
All right. Michelle, if the owner has financial problems, are there other options for funding if the contractor can't be an investor like we've just been talking about?
Yeah, Roy, obviously, There's other parties that you could try to bring in as an investor that have the same concerns and issues, but could be a resolution. In the fact scenario that we have, going after your commercial tenants could help. But if I got that call from an owner developer, my first question would really be to ask them to step back and figure out why there are financial issues on the project. It could be that certain aspects of the project are being deemed too risky for the investors or the lender. Maybe in part due to the local municipal requirements on the project. So going back to square one and seeing if you can renegotiate with the local municipality or ask about assistance. Local leaders are going to be invested in the project. They're going to want to see that the project succeeds. So there could be some flexibility that was not there in the first go around. And depending on where you are at the project, one creative solution from the real estate development side is to create a commercial condominium on the project where you're breaking off portions of the project, perhaps that are higher risk, so you can have different financing structures on the project. Again, our fact scenario, perhaps you create a commercial condominium of the parking lot separately from the building. You can have that be financed differently with different income streams coming in the future that can help bankroll the overall project.
All right, thanks. Let's obviously make this a full-fledged debacle with another element to our fact situation. What if the contractor's performance is at issue? Either he's late or there's construction defects, and hence the owner says, hey, I'm not paying you, you're tardy in your performance or the project isn't right. Lauren, if you're wearing that subcontractor's lawyer hat, your work has been done properly, you're done with your scope of work. What is your advice to the subcontractor, and how does that impact the owner?
Well, I'm a broken record here because first I want to review my client's subcontract, which I think has been my answer to almost everything that has been asked of me. But I want to review the subcontract to determine the claims process. Again, we don't want to miss any deadlines. Win the easy battles, which is make sure you timely send out a claim or notice of claim and include all the relevant information. Next, I'd ask my client about contacting the owner, make sure that the owner is aware that there's subcontractors owed on the project. Owners typically want to avoid the lien filings. It's really bad for their relationships with their lenders and their investors. And so they may pay subcontractors directly in order to avoid liens. This is especially true if the owner doesn't take issue with my client's work. If my client's work was done correctly and my client is threatening a lien, an owner may want to bypass that entire debacle by paying my client directly. If my client learns that the owner has already paid the general contractor for my work, then there's the potential for theft by contractor claims that would be available to the subcontractor. And we certainly want to put the owner and the general contractor on notice of the fact that we believe some of those claims exist.
All right, let's tweak it a little bit more, Lauren, and you're going to still be a lawyer for, but in this case, the general contractor. One of the subs, let's say the electrician caused a fire, and thankfully no one was injured, but just property damage. What's your advice to that owner, and how does it impact them?
Just to clarify, am I representing the general contractor?
Yeah, you're representing the general contractor. And so what's your advice to that general contractor, and how does it impact that owner?
Well, the general contractor should encourage the owner to submit a builder's risk claim for a fire on the project if that's not already been done. Usually general contractors are named as an additional named insured on those policies. So the general contractor could do it themselves if the owner isn't. But the builder's risk insurance will typically cover buildings and structures while they are under construction, as well as materials, supplies, equipment that are on site or in transit. Assuming something like a fire is covered, then the builder's risk policy should cover the immediate remediation efforts, as well as repairing the fire and water damage. The purpose of that policy is to get the project back on track, and investigations typically happen later to assess who is responsible for the damage. If the builder's risk policy doesn't provide coverage, then ultimately my client, the general contractor, is responsible for the work of its subcontractors, and that includes any mistakes or errors that subcontractor makes. So I would expect that the owner is going to put me on notice of a claim, and may even commence the claims process if I'm not taking immediate action. but the owner really wants to make sure that the asset is protected, as does my client, the general contractor. So getting a remediation contractor on board is also really important, so that the building itself doesn't suffer from mold or structural damage after a fire.
Ian, I just want to ask you a policy question. From the owner's perspective, are there a set of criteria or nuances from the owner-developer side as to whether or not they're going to require a builder's risk policy?
As an owner, it's prudent to carry one. It's also a little bit of an academic debate because any bank is going to require you to carry builder's risk. In the scenario we're talking about, as the owner, I think if my general called me and said, hey, my sub burned down a building, you should make a builder's risk claim. When I'm done laughing, I'm going to tell the general that he's got to make a claim on his insurance, which, you know, we will of course require them to carry in their construction contract. So this is probably a point where you get into a finger pointing match pretty quick.
All right.
I will tell you, I don't, the other thing is I've been in this situation and I received no pushback from the general contractor on advancing the claim through their insurance carrier.
All right, Chris, what if the owner calls you and says, hey, I have a non-performing contract, general contractor, the project's late, I'm not getting my calls returned, I'm hearing from subs that the contractor is going under. What's your advice to that owner?
Well, I'll pick up on Lauren's broken record theme and refer back to the use of all-hands status calls that should avoid these types of calls, but obviously this is not a perfect world and these situations do arise. I think my first order of business, and this picks up on some of what Ian has been talking about today, is assessing the owner's situation vis-a-vis its lenders and investors. I think that it's a little bit easier for the owner to control or triage in real time problems with generals or subs, but those problems can quickly transform into bigger problems with respect to overall project financing. And so I think that's really the first order of business. And then we look to the contracts, as Lauren so sagely advised us to do, and figure out what notice provisions are in there that may need to be invoked in order to start a cure period running or to otherwise take the remedial action that would be necessary.
Okay, Ian, you got that call that you have a non-performing general contractor or CM. What are sort of the action plans and process that is going to go through on your menu?
Yeah, I mean, the parade of horribles an owner goes through is to think about what the ripple effect is from that call on a time and money basis. So, and it means both in all likelihood. We talked about trying to figure out what the underlying problem of the non-performance is. Lots of times that's subcontractor based in the subcontractor performance on a project. So isolating that and identifying it is one way to do it. On the front end of the deal, the owner's temptation is, of course, to drive to the lowest price for the project. And so you might just step back on the front of a deal as an owner and say, I want the best qualified contractor to perform the work as opposed to the cheapest one. There's lots of different ways to skin it, but liquidated damages provisions are not uncommon, where an owner says, you have to complete certain portions of the project by certain dates. Sometimes it's dollars per day late, lots of different ways to do it. As a practical matter, I find that liquidated damages are very difficult to enforce and collect, but they do bring at times a heightened sense of urgency to project schedules and delays.
All right, thanks, Ian. Well, I think we've pretty well messed up this project with all the things that we could think of to make it a problem. But I want to thank all of you out there who are listening today. Thanks for spending some time with us. There's certainly going to be challenges in the next 6 to 12 months. Those of us at Michael Best and our real estate and construction complex team believe that what we're trying to make sure you think about as issue spotters is a multi-practice approach that will give real estate professionals the most options and will be the most collaborative and perhaps the most cost-effective in that type of resolution. So we appreciate you joining us today, spending some time. I obviously want to thank Ian for joining my colleagues here at Michael Best, naturally to Tracy and the CARW team for hosting this event for information sharing, and to all of you out there, have a great afternoon. Thanks.